All right, so today we're going to cover the most famous price targets for Tesla, and that comes from ARK, obviously. And ARK has a very famous $2,000 price target for Tesla. They expect 10 million cars to be sold. In their best case, they're expecting 20 million cars, right? So this is a very optimistic number. Another thing that it's a little bit up there is the 34% margin, right? This 34% margin is a little bit optimistic, especially when we are at 18% as of last quarter. But I think we can go up from here, but I don't know if we get to 34%. Now let's look at their revenue breakdown, right? And a lot of the issues that people have is that they're taking this robotaxi segment and they're taking this human driving FSD, and these are segments that do not exist today. In my price target, we are not gonna count robotaxi and we're not gonna count human driven ride hailing, at least not in the same way that Cathie's counting it. Think of this as a significantly more conservative estimation. All right, so first thing, remember how we said that Cathie, in their worst case scenario, they're expecting 10 million deliveries, and in their best case scenario, expecting over 20 million deliveries. So this is the best projection that I've seen for what the transition to EVs is going to be, and this has been pretty much correct for the last I don't know how many years. So in terms of what 2027 is going to look like, you can see it here. We are about 46 million to 47 million electric vehicles. So they're also expecting this to actually increase. I don't know if I agree with that, but this number at 46 million sounds like a very good and reasonable estimation. So we're going to use that number going forward. In terms of what Tesla market share has been, we can see it right here. I think Cathie is assuming something closer to 25%, maybe even 20, but this is a little bit of a fairy tale because Tesla, they're going from 15% to 20% market share. So I think a pretty fair assumption is to say that Tesla is going to get to 17% market share in global EV, and we're going to use that number going forward. Now let's look at Tesla margins, right? And the margins have actually been as high as 32% and they're now as low as 21%. So notice how I'm actually counting credits and I'm actually counting leases, and the reason for that is because even though the ZEV credits are going away, we have the Inflation Reduction Act, right? And that gives us credits in the battery front. So I could see in the short term actually this could come down a little bit, but I think long term Tesla gets closer to 25% total auto margins. So in terms of average selling price, we can see that this has been going a little bit down, and Cathie had also a 34k average selling price. So I think this is a pretty good estimation. So I'm gonna use for my estimation a 35k. So a little bit higher because I don't think the compact, even though it's gonna drop the ASP, the compact is not gonna be as many units as what Cathie is expecting on the other side. All right, so the thing that Cathie is also underestimating is energy and services, and we can see that energy has been on a roll, right? And services as well, but not as much as energy. I do think that services is also going to be a meaningful contributor going forward, but look at this, energy is actually more than doubling from year over year basis, right? They're more than 2x, and if you take services, is actually not 2x but more like 1.6x. so they're both growing a lot more than car is growing. And if you take a look at this run rate, we are at about 6 billion run rate on a yearly basis, and services is at about 7.5 billion run rate. I think I might be a little bit crazy for saying this, but I think we can get to 30 or even 40 billion for energy. That's how bullish I am on energy. And for services, I think we can get in the 40 to 50 billion dollars. And I think the reason for that is because even though I don't think FSD is gonna be the magical solution that people are thinking of, the FSD subscription is gonna be very, very successful and it's gonna contribute a lot to services. Tesla has the ability to sell premium connectivity, to sell insurance, to sell FSD, and to sell energy in the supercharging network. And all of those are gonna contribute to services in a very meaningful way. So I think we have everything we need to actually come up with a very reasonable price target. And the first thing that we're gonna see is that we're not even close to the 10 million that Cathie was sort of expecting. We're at about 7.8. We said that the current estimation for EVs is going to be 40 million. If Tesla keeps a 17%, we can get to that 7.8 million cars. In terms of margins, as we said, 25% margins, as Zach is indicating. In terms of energy margins, we've already done 12%, so I think we can definitely get into the 15%. I think in terms of services, we've already proved that we can get to 5%. So getting to 10%, it's just a matter of more premium connectivity, FSD subscription, and and insurance. In terms of expenses, we see that the expense ratio is not gonna go super high, and I see the R&D just staying at 7 bill and 8 bill for SG&A. And a lot of people are gonna point out to this and think that I'm delusional, that this is a little bit too low, but they haven't seen the actual charts of R&D and SG&A. OPEX is not growing as fast as people think. I think a 15 billion OPEX run rate is significantly in the cards because Tesla focuses a lot on costs, especially on the operational side. And all of that leaves us with $59.5 billion in profits. Notice that this is a very conservative number. I am a very conservative analyst. So now, what kind of share price can this support? I think there's two scenarios for this. Number one is that we have the PE that something like Apple has, which is about 30. Then we have a market cap of $1.79 trillion. And that supports a share price of 564. And there's a second scenario. If Tesla keeps the same PE that they have today, for example, which is a 50 PE, that supports almost a $3 trillion market cap, which is a share price of 940. Now, a couple of caveats. The first caveat is that you have to discount these prices to account for the opportunity cost of finance, right? Another one is that none of these two cases include a breakthrough in FSD. If a breakthrough in FSD happens, throw this out the window. In that case, we do go to a moon like Cathie Wood expects. And then the third thing that I'm gonna say is none of this is financial advice. This is just a very conservative pair of price targets on two different multiples. So use that information appropriately. I'm not doing any financial advice, but I think this is closer to reality. If you have found value in this video, please consider subscribing, like all that good stuff, and I'll see you next time.